Hello and welcome to the Weekend Investing Daily Bite of 14th of October. A decent day, I would say. A reasonable bounce in the markets. Bank Nifty leading the markets. Not much of change, but sort of reassuring that we are immediately not going down any further. We have been consolidating for 2, 3 sessions, and today we were a little uh, peppy in terms of going up. So it does seem like that the market is not wanting to go down immediately lower, but of course, that is the view that we are able to see as of today. Amazing story today in the second half of the video where truth behind CNX500, which probably most of you don't know. So this is a something that I also, when I looked at it the first time, I was like taken aback, and I didn't know about this. But it will be amazing for you also to learn about it. So please do stick around till the end of the video. Do also read all the disclaimers. They are important for your own safety. Um, in terms of subscription, if you have not subscribed to the channel, my daily request to you is to do so. If you haven't done so, please let us know in the comments why you're not subscribing, because that will be a great learning for me. Where is the market headed? Market, as I mentioned, is meandering in this couple of 100-point range. This trend that had come around from the beginning of the month, end of the last month and beginning of this one, seems to be flattening out, and only below this bottom here will we really say that market is going down further. If we stabilize around here and start above this average, I think that fear probably should go away soon. That is the reading as of today. Things can change in a day's notice. Nifty is up 0.66% today. Nifty next 50 above the average, near this previous high. Last 3, 4 sessions, we've come back from 72,500 to nearly 75,500, 0.36% today. All is looking all right. Mid caps closing at a 6, 7 day high, which is a good sign, up 0.36%. Tepid yet reassuring. Small caps also 6, 7 day high, again 0.29%, not a big move, but gradually inching up, which is again a good sign. Bank Nifty is probably where the biggest move came, 1.2% on Bank Nifty, and we are about to grow above this average. And it seems to me that Bank Nifty is coming out of the weakness as of now. Momentum trends. Advance decline ratio almost even, 262 advances to 235 declines within the top 500 stocks. So I would say market is fairly evenly poised. FII buying or selling in the last session on 11th October was negative 4,000 crores. DII is almost buying whatever FIIs are selling at 3,700 crores. So no imbalance really is there. We have institutional buying and institutional selling. Both are reasonably balanced. Heat map, Mixed mixed bag. You had Maruti, ONGC, Bajaj Finance, Axis, Adani Enterprise, and Trent losing some ground. You had Wipro, Tech Mahindra, HDFC Bank, a surprise 2.25% up. Kotak Bank also up. HDFC Life also up. A large manager has sold out of HDFC Life, and that is marking the bottom of that stock. ITC up 1.79%, and L&T is up 2%. Nifty next 50, you are seeing Lodha go up 3.4%, DLF up 1.9%, Divi's Lab, Zomato slightly up. DMAT was thrashed down at plus 8%. So DMAT not finding favor with investors after its results. HAL, IOC, um, you had Gas Authority, REC, PFC, all the public sector enterprise stocks sort of slightly in the green, not really falling today. Sectoral trends, real estate up 1.6%. So real estate, IT, Bank Nifty led by private banks, infra and FMCG stocks. These were the ones leading more than 0.5% or more today. Now for the last 1 week, you can see that in the second column here, only FMCG is minus 1%. Other than that, everything has recovered. And over the last 1 month, FMCG is minus 4%, energy is minus 1.6, but most others are within half, 1% negative to plus 5, 6% positive. Metals leading over a monthly basis. For today's day, metals and commodities were soft versus other sectors. Overall, for 12 months, I think most sectors are doing well. Private banking is lagging behind others, but other than that, most are in nice double-digit gains over the last 12 months. So if you will see very, very short term, markets will always have issues. If you will see reasonably long term, you will find that there are returns everywhere, and you really have to do something silly in the markets to not make money in the India market. This much I can say, especially in the last 5 years. If your returns have not been, let's say, at least 100%, there is something wrong. There should have been, at least 100% gain in all portfolios in the last 5 years. Um, Raymond, real estate stocks moving up. So Raymond, Opera Realty, Lodha, Godrej, DLF, Soba, all doing well. Real estate has been consolidating since June. In long-term raging bull markets in real estate, there are short periods of consolidation, and that's what seems to be happening even on the ground. So even on the ground, I can vouch for the NCR market. Things have slowed down, sales have slowed down, but it is not like there are discounts available, or there is a seller's queue and there are no buyers in the market. That situation is not there at all. Aptus Value Housing Finance is the one which really was taking up today. So stock of the day, 8% up today, new highs. This has been consolidating. It is sort of making a inverted HNS pattern, but not really. Multiple tops have been broken out, so there is a chance that this breaks out and goes up much, much ahead. So let's now come to the true picture of CNX 500 that we did not know so far. So what is CNX 500? CNX 500 is an index made up by the index committee at the index company, which is owned by NSE also. Uh, so they create the index. They decide what will be the constituents, how much will be the weightage based on whatever rules that they have. And CNX 500 is the top 500 stocks of the universe of NSE. And one would imagine that CNX 500 would have large caps, mid caps, and small caps. Large cap being the top 100 stocks, mid caps being the next 150 stocks, and 250 stocks further to that. 251st to 500th are named as small caps, and further are also small caps. But for this CNX 500 purpose, you have 100 large caps, 150 mid caps, and 250 small caps. Now you would imagine CNX 500 would be a good mix of all this. But what is the situation? Large caps, mid caps, and small caps, these distribution, which is as I just mentioned. Can you now guess the total weightage of just the 2% stocks from CNX 500 universe? So just the top 10 stocks out of 500, how much weightage they have in CNX 500? These are the 10 stocks: HDFC Bank, Reliance, ICICI, Infosys, ITC, Bharti, Tata Consultancy, Larsen, Axis, and State Bank of India. And they make up 33% of the top 10 of the CNX 500 index. So CNX 500 index, 33% is just the top 10 stocks. 2% make up the 33% weight, and 98% stocks that are there below that make up only 67% weights, and we will come to that distribution also. Now, you can imagine that if these stocks are not performing, or some of these larger caps are not performing, it has a huge implication on the performance of CNX 500 because of the weights right there. So if HDFC Bank is not performing, 6.6% of your index is not performing. If for instance, Reliance doesn't perform for 5 years, then 5% of your index is not performing. So that's how the index non-performance happens. Now, within the next 500 stocks, what is the distribution? The first 50 stocks take up 59% of the weight. So top 50 stocks, 59% gone. 51st to 100 stock, another 15% gone. So if you combine the top 1 to 100th position, that is 74% of CNX 500 is already finished in the top 100. Then you go from 101 to, let's say, 250, 18% gone, and 250 onwards the remaining. So that is the distribution of CNX 500. So if I were to summarize this, large caps, first to 100 stock make up 74%, mid caps 100 first to 250 make up 18%, and small caps, which are 250 stocks, are given only 9% weight in the entire. So if large caps and mid caps are not moving and small caps double, CNX 500 is not going to move because only 9% weight is there towards small caps. And if large caps are not moving and mid and small caps are doing, are falling badly, then also CNX 500 will not move much because mid and small caps have hardly 27% weight. So this is very, very large cap orientation. Large cap weighted, 74% is large cap. I think it is misleading. I think CNX 500, as the name suggests, to a layman, feels like you are investing or following a very nice mixed market cap index. where you will get flavor of large, mid, and small caps. But here, the weightage has totally skewed the entire index towards the large cap segment. And if you will compare Nifty and CNX 500, there is hardly any difference in the trajectory over the last 10-15 years, if you will see that chart. So that is not the true purpose of creating CNX 500. I think there is uh, loss of intent in terms of what CNX 500 should have been. Top sectors now. Top 7 sectors out of maybe 15 are taking up 72% weightage. So it is not just the market cap, but the sector concentration also, which is, so if you have a big sector and big some large cap stocks there, and if that sector is not moving, your index will not move. So financial services is 28%, IT is 9.5%, oil and gas is 8%, automobile is 7.5%, FMCG 7.5%. You take the top five, that itself is almost taking up more than 55% of your weightage. And if you come down, I mean, real estate is 1.3%, textile is 0.26%. Is textile industry only representative of 0.2% of India's composition of industries? No. Is construction material services only 1.7%? No. So these are very lopsided indices, which if you are following an ETF based on CNX 500 or any other product which is following these weightages, it is going to give you a large cap performance. So might as well call it a large cap index then, with some exposure to mid and small cap, because it is misleading when you say CNX 500, it represents the top 500 stocks. It actually is not represented. So the strategies which are based on CNX 500, for instance, weekend investing MI30 is there, or other strategies may be there which look at CNX 500 or similar kind of universe. Here at least the weights are not fixed. We are going to give equal weights. If any stock which is less weighted is performing well, you will have equal weight of that, and it will give you that performance kicker in your portfolio. So that is like not differentiating between different stocks. There is no sort of racism among stocks. Here it is being a sort of a racist selection, that large caps are good, we should give 74% to them, mid caps okay 18%, and small caps are like the untouchables, which you don't want to have. So this kind of a index making, I think, is not in the best interest of how you're going to follow the index. So yes, there is a rule which is getting followed. I'm not saying they are not following their rules, but the rule formation itself is the problem in my view. I think as more and more money gets accumulated into large caps, their performance slows down. The alpha that you're trying to generate from that goes away, and you want to have the small and mid cap exposure, so that smaller companies which are going to become larger caps tomorrow, you should be having exposure to that. That is what is going to strengthen your performance and your portfolio, which all neutral strategies which don't follow these weights will do for your portfolio. So let me know your thoughts on this data. I think this is mind-numbing and eye-opening data. If you think so, I thought so when I saw it for the first time. And this essentially describes how everybody's crowding into the same stocks, and the same names, the same industries, just by because of virtue of following these misguided indices. Thanks. Bye.